afternoon, everybody. Welcome to your Monday edition of the TraderMerlin show. A rainy day for us out here on the West Coast. Hope you all are doing well. I have to put the boat in the water to get that thing going. So all in all, everything going pretty good over here on my end. Markets are what they are. We'll talk about that at length today. Now, I'm starting today off with, we did a statement on, on Thursday about Jerome Powell. Actually, it was Wednesday after the FOMC statement, and we did another one with Bill Addis on Thursday talking more about the Fed and Jerome Powell. And there was a highly anticipated interview this weekend on 60 Minutes, which some of you may have watched. If you didn't, you can go to YouTube, type in Jerome Powell 60 Minutes, and you'll get to see the full 13-minute interview. All in all, I will say it was pretty good. There's the graphic there. And what I wrote on there is rate cut delay. Now, we had been talking about the Fed funds futures and how the industry, Wall Street, has been pricing in a lot more rate cuts than the Fed was telegraphing, right? They said that at the end of last year, they expected to get to about 4.6% by the end of 2024, and the market had priced in much more than that. They thought we were going to get all the way down to 4%, maybe even 3.75, which would be, 6 to 8 rate cuts. Well, in that interview, which again, I encourage you to watch because I think he said some good things about the economy, Jerome Powell said, we just don't see that happening for the March meeting. So that caused a little bit of, angst in the part of the market participants. So let's go look at that Fed funds futures here real quick just to see what that change was. So if we go to the March meeting, 83% now expect it to stay right where it's at. Now, is that a change? Not really much from what we saw on Friday, but certainly going back to January 24th, there was a 46% chance we're going to have a rate cut. At least that's what the expectations were. Now it's only 16%. Again, Jerome Powell basically taking it off of the plate for that March meeting, and now May. So what does the May numbers do? And I think that this jumped a little bit in the keep it rate, locked where it's at rate. Right now it's at 40.4%. It was 26.8%. So this is, I think, in line with what we talked about on kind of the year-end show, which was, this year there is going to be some rate cuts. I do think there will be some rate cuts, but nowhere near as aggressive as what the markets are pricing in. I think Jerome Powell kind of squished that one at his interview on 60 Minutes, which is again pretty good. So right now everything kind of shifting more towards the hold cycle, which again I think they should hold indefinitely until they get these numbers where they need them to be. A lot of talk was about inflation. A lot of talk was about unemployment. And of course, as we've talked about many times in this program, we're at historically low levels on unemployment. So really, they don't have to be concerned about that at all at this point. So let's go look out one full year. I'm going to go out and see what the change is for the full year forecast by our market participants who are putting their money where their mouth is. And really, not a lot of change here. It looks like they've stepped up just a little bit, meaning that there aren't going to be as many rate cuts, but still, you look at the median price projection here, it's 4.25, which would be, 4 rate cuts from current levels. It was 6 a little bit near the tail end of last year, but all in all, I think Jerome Powell did a really good job. He actually, I'm a skeptic simply because you print that much money. I do believe there's going to be some impact, typically in the form of a recession from that. And you look at the way things are shaping up, it feels like, I hate using the term, but that soft landing does feel like it's kind of intact. What 60-minute interview was too long, and even at 200, it was okay. That was good. He pointed out some good points. What was the other? There was a couple things he said which I thought were rather interesting. We've talked about the amount of debt and why that is such a big problem for our markets, that you're kicking it to future generations. And that he actually said that specifically, that I feel like we're stealing from future generations. And it's really not his place to criticize government, because remember, it's the government that put the Fed in power and gives them their power and authority to do what they do. If the government wants to, they could take that away right away. So it was interesting where he was talking about that specific component of it, saying, with the amount of debt, I'm very concerned. We need to come back to some fiscal policy tightening here and get things back down under control. Otherwise, we'll hit that point where we get into a much worse situation. I thought that was a good one, and hopefully we hear something from our elected representatives on that track. Certainly, we'll be hearing lots of pipe dreams, pie in the sky ideas from our all the candidates as they go towards election for the presidency and Congress and all these other positions. But yeah, it'll be a fun one going forward. 60 Minutes mentioned the date when we got... No, we didn't get that one. The one piece, another piece in there that I thought was interesting, and I mentioned this in a few times. If you look at like my regular routine is to go with Larry to the Habit on Fridays, that cost has been going up and up and up. I think there's a general misconception by the population that, if inflation's under control, that I would expect all prices to come back down. That's absolutely not true. My guess is you probably will not see any restaurant prices drop their price at all. They will keep right where they're at, and that will just increase their profit margins, right? Because if the eggs and milk and grains and cereal, all that stuff gets cheaper to produce, that means more profit for companies like General Mills, Kraft Heinz, so you might want to start looking potentially at some of those companies, because if they don't lower the price of their goods, which they've raised to accommodate for the higher input costs, they don't lower the cost of their product, but the cost of their components are dropping, that means larger profit margins for these companies out there. So that could be a play going forward here if inflation continues to drop. You're not going to see, again, restaurants dropping their prices, but what you are going to see is the raw components coming in. Your corn, your wheat, your soybeans, whatever those commodities are, those are fluctuating wildly. And that's been something that we've talked about quite a bit here. That's one of the major causes why inflation has dropped so much. But there are certain areas that they're probably not going to drop, and restaurants being one of those. What areas will drop? You may see car prices drop just because of supply and demand, and they're usually kind of volatile with their prices. Other areas where you will see prices drop and have seen prices drop significantly is the price of oil and that commodity, because we're much closer to the direct source of that than we are by going to a restaurant. He said inflation will go down, but not your eggs and groceries. Exactly. Yeah, the stuff that really matters. But, and it's interesting because you can have those two things, right? Some's going to go up and some's going to come down. He specifically, I wish I took notes on it, because he specifically said, some things are not going to come down. And he was very stern about that. And I was like, yeah, like I said, my Habit, which is now $12 and something cents, and it was like $8.35. I'm up over 50% since 2020. They're not going to drop the price of that burger. The only way that you fix those types of inflationary prices is by not buying those goods and services. And I'll give you guys an example, which I've mentioned many times. There's a ramen place down here. I love it. It's called Kitty Kata Ramen. Fantastic ramen, very unique noodles. It's from a specific province in Japan. It used to be I could go get a large ramen there with a 5-piece pan-fried gyoza, and I'm out the door, tax, tip, everything for $21. I went recently, and it was $38 for the exact same thing, tax, tip, out the door. And it's like, you know what? That's just too much for a bowl of noodles. So I have stopped going to that restaurant. At a certain point, if more people do it, and I have noticed, by the way, that there's no lines anymore. It's easy to get a table because no one's going anymore. They will probably start to drop their price. So as John O'Donnell used to always tell me, the cure for a high price is a higher price. Just keep raising prices, and at a certain point, your customer's going to go, I'm done with that one. I'm moving on to something else. And that's how I act, is with my actions on those types of things. Salary at the Habit is $11 an hour. Now it's going to be, yep. You got to offset those costs too, right? And we're probably not going to see the minimum wage drop. Yeah, you can't see it going, we're going to go from $22. Let's cut minimum wage down to 14, Your minimum wage will continue to go up and up and up and up. Imagine if you eat full organic grass-fed groceries. Yeah, not me, Lisa. Sorry. Hello, Ricardo. Good to see you. What else? Restrictions to the high price. Exactly. And, we have by myself, I'm not going to make an impact on the price of, Kitty Kata Ramen. But at a certain point, the collective whole of consumers can make a statement. You really want to make a statement about oil prices in California or gas prices in California. If we could get all Californians to stop driving for one day, your voice would be heard. Your voice would absolutely be heard. $27 for a soup, NJ. That's crazy. Anyway, so that was the highlight for me. Really nothing that exciting happened over the weekend from a political perspective, other than, for all the text message I was getting about the Grammys, where I just don't care. I don't care about the Grammys. Who cares? I'm done. I don't care about the Oscars. I don't care about the Grammys. It's all one pageantry thing that I'm not a big fan of. So I will wait for the Super Bowl, which I do care about. He did talk about housing market, and, he was talking about how the housing market's going to be impacted by this and get ebbs and flows in it, but we know that, right? We've covered that a dozen plus times on this program as well. It's when am I going to bring John O'Donnell? You know, I didn't give him the rate prediction. You know, I'll reach out to him after the show today, Pepe, and I'll see if I can get him on here soon. He's always ready to come on the program. I just I'm lazy about getting guests on the show, as you guys have probably seen. Okay, let me go out and just start with our top 7 here. The numbers have changed a little bit since it's we've rolled over into new hours. But let's start off at the bottom here. Bitcoin now 1.46% on the day. Not anything shocking for me. However, I don't like the way that it finished. We had this long topping tail, which means at one point we had a nice big green candle looking bullish, and I was kind of feeling comfortable there. And all of a sudden we came and closed right near the lows of the day for Bitcoin. You know, I did have this line here, this demand zone drawn between 39,225 and 38,000. That's still in play. You know, we did tiptoe into it back here on January 23rd, which I know some of you bought. I got some messages from you, so thank you. But we'll see if that one holds. At this point, we have not been able to make a new high, but we've also not been able to make a new low. So Bitcoin feels like it's consolidating here, and I think that the excitement and talk track, yeah, exactly. Margaret says Bitcoin's losing momentum. Yeah, it feels like, it's just going to lull and go sideways for a while. And that may continue on for another month or two. Remember, the real excitement happens after the halving. Once the halving happens, that's when it really starts to go crazy. And actually, after the halving, Bitcoin will usually trend up for a little bit, slightly up, and then it's the last 12 months of the 4-year cycle where it just goes crazy. Yep, exactly. Now, Bitcoin basing. Let's see. What else we got? Moving from there, Russell. I was very close today to selling puts on the Russell. I actually did sell some puts on building materials today, XLB. Just going into summer, my expectation is typically building materials does well during the summer times because you got warm weather, you got expansion, economy still is looking rather good, and rates aren't that astronomically high, so I kind of expected that to move back up. But let me show you that here in a second. Here's your Russell down 1.36%, making it your 7th place finisher. This looks very similar to what we saw with Bitcoin. It's not making new highs, not making new lows, although Russell does feel weaker. Coming right back down to these lows that we saw from January 17th. And again, I have these 2 little red lines in here, which is kind of that the beginning of your demand zone there. I'll draw a better demand zone on here. Let's go to how I would draw it, which is from there to there. So there's your demand zone on the Russell, which is going to take you from 1886 down to 1876 would be that demand zone that I have for the Russell. And that could definitely come into play here going forward. How do you think the halving will affect tickers like coin? Interesting question, Dave. That's a really good question. I'll let you guys type in a chat. You let me know what you think, right? How do you think the halving is going to impact somebody like Coinbase? And type it in a chat. I'm curious to see what you think. I'll give you guys some time. Let me go on with the top 8 here, but in the chat, type in how you think a halving of Bitcoin will impact Coinbase. It's a great question, and I think I have a very definitive answer on that one. All right, moving up. Number 6. Pain for me today with my with my silver. Gold was down 0.53%. Technically, it's just going sideways here. I don't see much going on. Tom, I know you're the range master with your spread trades and iron condors and things like that. I might just actually do this for gold for the foreseeable future. It feels like we're stuck in this little range. We've been bouncing back and forth in it, and at this point, we're dead center of that yellow box. So I kind of think I just leave it alone until I get any movement out. Now, SLV, on the other hand, has been looking weaker and coming back down towards these lows, which is right around $20. And I have to, make that call. I am a long-term holder of silver and think it'll do fine long-term. But boy, if we get below that $20 mark, you're probably going to see this thing fall to 19. It seems like there's a long drop here for silver. So I'm not that comfortable with my silver at this point, feeling a little bad on it. But I will stay the course and follow the plan. S&P 500. There's your ES. Some would call this a bearish Harami formation. You've got a strong bullish up move going on for an extended period of time. You have a candle today which fits inside the body of yesterday. Now, it doesn't include the tails, but people still would call this a bearish Harami formation. So how do you trade a Harami formation? Typically, you're going to go by a break below the low of the day, and that was going to be right here. So a low... If it drops below 49.37 tomorrow, there's a short opportunity potential for that ES going forward. NASDAQ was looking real weak at one point and then really just bounced right back up. Looked phenomenal. Love the strength in the NASDAQ. Not personally because I am short the NASDAQ and my stop loss is above the high from the 24th of January, which I may get taken out here and take probably $1,000 loss on that trade, which would not be what I want to happen, but I'll wait and see. I'm not convinced that we're going to rip through this and go to all-time highs yet again, but it could happen. On the day, it's only down 0.18%. If you notice on this chart, though, it was down a lot more than that. If you go by Friday's closing price to the low of today, it was down over 1% today, and ultimately clawing back and ending pretty much unchanged. So all in all, a great day, even though it was down 0.18%. The 10-year was actually up 3.5% today, so it should be your number one. But it's already rolled over into the new hours, so you can see this big green candle here. Not only did we have a pretty much bullish all day, but if you look at the gap up from Friday to where we closed, 3.38% gain for that 10-year. Now, this brings us right back up to that high we established just on the 24th and 25th of January. And I still stand by two things. Number one, you've got this overhead supply level right around, at least I know it doesn't operate the same as an individual security because it's a bond product, but I still think that 4.25 mark becomes a very attractive supply zone where you might see this thing start to turn its way back down. So interesting to see that it's 2-day rally in the bonds. However, it's got to get above this and coming right into multiple points that would suggest difficulty. Not only the current highs that it's at, but you've got a supply zone which is slightly higher, a downtrend line, a lot of factors here. And let's go to the Dixie. All right. So I had this one mapped out and talking about because you might remember a few times I've had this discussion where we saw the dollar get to this low on December 28th, still in a downtrend. Okay, it rallied up, went sideways, and then broke up. And once it broke up here on the 16th of January, it officially broke your downtrend line here. Then it went sideways again. And the talk track going into last Wednesday was, look, you've had this move up, sideways consolidation, followed by a rip to the upside, sideways consolidation. So probability is higher. You're going to see this thing rip to the upside, and you did. 2 days in a row of just real strong moves. And now you're at 104.50, which is where I've got that red line drawn, which is that supply zone that goes back to November 15th and 16th. Now the question is, what happens from here? My assumption would be that on this dollar index, you'll probably see a little bit of a pullback here. If it doesn't pull back, then we're going to hit this 105.80 in a very short period of time, which means big moves up for the US dollar, which means bearish moves for the equity market. So kind of keep your eye on that one. I really feel like this should have a pullback because it's moved so much so quickly. However, if there is driving momentum here from an institutional perspective, it could rip through this 104.50, and then all of a sudden you're looking at 100 plus pips, 100 plus pips, getting a full dollar higher from current levels. So great looking chart, but this is not good for anybody here who is bullish in the markets. So I'm actually kind of surprised, honestly, that we didn't see the equity market sell off a little bit more today because of that surge in the dollar. All right, and finally, crude oil. Not really much to speak of here. We've had that 4 or 5 day slide in crude oil, formed a little bit of a hammer formation. I wouldn't call this really at any strong demand zone, though. I know some of you are oil traders. Fine, we can take these lines off here. And what I'll do is I'll add one across the top of today's hammer formation and use that as your guideline. If you get above 73.28 from the long side tomorrow, you may have a nice long trade on those crude oil futures. All right, let me go back here and see what you guys said. One second, I see a Dave Ramsey comment. Let me get to that one, Jags, in just a second. I haven't avoided it, but I know I've got a bunch of new people here. If you are new, I love chat in the live chat here. Just keep it friendly. No reason to get hostile with anybody. The other part is if you want to send it directly to me, put a couple question marks in front of your question, just because I will scan through those, and if I see the question marks, I will know that that's meant for me, as opposed to just chat for the room. So just for the new ones out there, and of course, if you're new, hit that subscribe button. Let's see. Let me real quickly go back. So Lisa says, I think coin is going to be fine and go back up. I got a not sure. I have some puts, so I only have one. Tom says, halving will make the move up in Bitcoin obvious again and will drive more interest. Good for coin. Yes. So that's my belief in thinking on that one, Tom. I'm right there with you on Coinbase. So now we've gone through these top 8 here. Let's go to coin. Remember, Coinbase has as assets under management, it may now be one of the largest holders. Now, they don't own that Bitcoin because they're holding it for all these different firms. They're holding it for iShares, for BlackRock. They're holding it for ARK. They're holding it for Franklin Templeton. They're holding all these different spot Bitcoin ETFs are holding their Bitcoin at Coinbase, which once you read the statements, the documents, I'm not sure if it's the same for institutional, but I know as retailers, if I keep cryptocurrency at Coinbase, let's say I've got 2 Bitcoin there, it's not mine anymore. It's Coinbase's Bitcoin. It's just the way it's set up because it's not a security. There's no protection. There's no real rules on that. Again, I believe that has to change. That technically means that's assets under management, or AUM, and that's how a lot of companies get valuations, is how much assets under management. So if they got all this Bitcoin and Bitcoin halves, and all of a sudden the valuation of Bitcoin surges. Let's say it does what I think it's going to do. Between today, let's call it 41,000, 42,000. I think by November of 2025, Bitcoin's going to be at 250,000. So if that happens, the assets under management valuation for Coinbase is going to surge. And to me, that creates a huge buying opportunity for Coinbase because it's AUM, and not only will that move their Bitcoin, but also all their other holdings. And remember, Coinbase made it very clear years ago that they are buying into a lot of other projects. They are investing in the digital asset space with some of their profits or investments because they feel that there's opportunity out there. Yes, earnings coming up right here. What is it, the 15th? Is that what it says? Yeah, on the 15th. So next week you've got Coinbase's earnings. Honestly, I'll be real honest here. What I hope happens on Coinbase, I hope they miss earnings badly. I hope they crater and they have a 30-40% down day because I'm going to buy it. I will probably load the boat with puts, basically sell a ton of puts as well as buy directionally because I do want to own Coinbase long term. I mentioned this when it was down around $30 on this program. I said I'd like to own Coinbase, but I was a little nervous because of the insolvency issue, and I'm kicking myself. It's one of those ones I look back at and go, Merlin, you idiot. Listen to what you say. And we were down in that $30 range. There you go. That was back in December of 2022. You guys feel free to, I don't want to come across as, I said all this stuff. Hey, I've got video recordings of it all to show that I did say that. So I would like to own it. Unfortunately, I did not buy into any Coinbase, and I would like to own it long term. So I think ultimately Coinbase will do very well after the halving. I think you're going to see more momentum move to the upside here for Coinbase, which all in all will be good long term. Now, remember, that's one dimensional. When I say one dimensional, that means that's based off of the historical price cycles of Bitcoin, of digital assets, period. If let's say we get through this election and Biden is reelected as president, it's very clear that that administration is anti-crypto, and we could see struggles with cryptocurrency, regulation, legalization, just problems with that industry. It's my belief that you're going to see a bunch of senators change their stance and position themselves as pro-digital assets, which will help this industry. So I think there's a big, dark cloud looming over which administration's kind of in power and what's their stance towards digital assets. Because if you keep the current administration, we're going to have a few more years of indecisiveness. I would say forced indecision. It's my belief. I wish we could look at the records of all this. If we could pull back the curtain and see the actual real truth, I would bet a very good amount of money that Elizabeth Warren has been pressuring Joe Biden to pressure Gary Gensler and the SEC to stall anything to do with digital assets. Just do not okay anything. Just keep it going that way. For me, that's my belief. And I'm pretty sure it's true. If you look at the comments that she's been making, it's very clear. And it seems to go aligning perfectly with what has been going on with the SEC. Now, hopefully, Thomas I will leave the country. That's a good question, Margaret. Let me do something here real quick. Let's go to, what can I do? It's got a longer term chart. Let's go to, so you can't get I'm sure there's a lot of charts out there that will allow you to do this, but it takes me too much time to do it in TradingView. I know I can do it in TradingView, as I'm going to have some pushback from you guys here. But let's go here. I'm going to go to stockcharts.com, and I'm going to type in Coinbase, and then I'm also going to go into, how about BITO? Now, I know it's a Bitcoin future, so it's going to be slightly different, but at least that'll give me a performance chart against those two. So the red is Coinbase, and BITO, which should reflect Bitcoin, is in blue. Based off of that, it tells me that Coinbase should have a more significant pullback here. No less. Trump has already said he's against a central bank digital currency. He's not. He hasn't made a comment. At least to my knowledge, he's against Bitcoin or digital assets. He's against a central bank digital currency, and of course, you've got to say that nowadays. You have to. If you say you're a pro digital currency, pro central bank digital currency as an elected official, what you're basically telling your constituents is, I am pro surveillance and I want to keep my tabs on you. Indirectly, that's what you're saying to your constituents. So right now, elected officials, the flag they're going to be waving is no central bank digital currency. We want to let you guys be free and do what you want. So that's what he's been saying. There was rumors out there he actually has a bunch of Ethereum, but I don't know the factuality of that. Who knows what's going on with that truth. But so to answer your question, is there a correlation between Coinbase and Bitcoin? Based off this chart, I would say yes, but it's much more amplified for Coinbase, because you notice when it rallies up here, when Bitcoin rallies up, Coinbase has a huge surge. When Bitcoin sells off, Coinbase has a dramatic sell-off. So I definitely feel like there's some correlation, but it's not 100%, right? It's a loose correlation, and I would say it's like if you take the blue line here as being the S&P 500, then Coinbase have a beta of like 5, meaning it moves 5 times as much as the underlier. But that's all I have on that one. Let's see if I go further out here. I mean, this goes all the way back to December of 2022, so going back a little over a year. Not that tightly correlated. Percentage gains, maybe. Let's go back to the beginning of these two. I mean, I think that answers that question, right? I mean, I think it's fairly correlated. I'm not going to say step for step, but it's pretty darn close, right? So great question. Let me go back up here. Earns your coin. Also, Coinbase is approved in France a few months back. That's good to know. Let's see. We really need aid limits desperately. I agree. I mean, I don't know. I mean, I know some older people who are sharp as a tack and incredibly intelligent. But, if you are having moments of where you can't even speak, and this isn't directed at Biden, but you also have a couple other members of Congress who are like freezing up at conferences. They can't speak. They don't know where they are. It's time. It's time for you to step down and move on. And it just kind of shocks me that these people get voted back into office. But yes, I think they should have term limits for sure. What else I got in here? Jamie Dimon is in bed with Gary. Absolutely. You look at what happened with the financial crisis we saw when we had Signature Bank, Silicon Valley Bank, and First Republic go under. Who had a closed door meeting with Jerome Powell and oh my God, Janet Yellen, Jerome Powell, Gary Gensler, and Jamie Dimon had a closed door meeting. That should clearly show you some bias there. So obviously he's got some deep-rooted connections with them. So his feelings towards cryptocurrency and digital assets, because it threatens banks, that's going to precipitate into the regulatory environment. And it's just unfortunate. But yeah, Mitch McConnell, that's the guy. Man, Mitch McConnell. There's times where I've like, did he just die? He died standing up, didn't he? Like, oh no, he just came to. Like, just, wow, really? Now they're saying good nor bad about you as your viewpoints, but you gotta go. You can't lead me like that. Oliver says Jamie is buying the crypto. I always make this remark because it's true and factual. When the first time Jamie Dimon was asked about Bitcoin, he was just totally against it and saying it's BS and dog doo-doo and crap and stay away from it. I don't care. I have receipts, screenshots of JP Morgan's traders in Sweden buying their spot Bitcoin ETF and loading the boat on it. So, he's definitely a hypocrite for sure. What about Gavin Newsom? Is he pro-crypto? I don't know about Gavin Newsom. I don't know. Being a Democrat, my assumption would be that he's probably not pro-crypto, but hard to be out in, near Silicon Valley and not be pro-innovation. And there's a fine line between crypto and, innovation. I would argue that crypto does represent innovation. And maybe I've tried to change this term for my cryptocurrency course. It's more digital assets, right? That to me is really the undeniable progress of technology. Is going to be things that we own now going digital. Like I mentioned many times before, I have a great record collection downstairs. Love vinyl. Nobody collects vinyl anymore. right? That's physical. Then I remember it was vinyl, and then it was cassettes, 8 tracks, and CDs, all physical things that I could hold, right? You guys all, I'm sure many of you have. I know Tom's probably still got an 8-track player in his car. And then we went to CDs, which were cool, right? It's a little physical plastic thing, but you could easily copy and do whatever you wanted with those CDs. And then we went to an MP3 player. And that was that first step of we no longer have a physical holding of audio. It's just a device to hold digital music. And now all of a sudden we all stream it from everywhere. And I don't think that there's any reason, and please, if you disagree, absolutely type it in the chat. But I don't think that there's any reason why all things we do with money involved will no longer have physical money. It will be digital because it's faster, it's more transparent, it's easier for us to carry. It's just the evolution. So, you kind of have to be pro-digital assets if you're anybody who's pro-innovation. If you're anti-innovation and you want to stay in the Stone Ages, then stay where you're at, because other people will adopt digital assets and move way further down that road of evolution than we are. Yeah. Tom, oh boy, that's a good one. He said he's pro-klepto. That was good. That was well played. Tom, you'd be a writer for Saturday Night Live. That was good. CDs are not as good musically. Of course, John. There's a fidelity that's missing from a CD, right? And, I had a friend of mine. He had a $10,000 record player. And I remember at the time, I'm like, what are you, nuts? And he's like, listen to this. So he put on a CD it was Working Man by Rush. If you ever listened to Working Man, great, just heavy riffs, great vocals on Working Man. He played me the CD, and I'm rocking it. I'm like, yeah, I love this one. He played on his normal, regular speakers, and he had these high-fidelity speakers with his $10,000 turntable, and he played the vinyl, and it was like, it's like going from a high school auditorium where you have their music program, and notes are all over the place, it's not really tight, and it doesn't sound great, to the Philharmonic just blasting you with music. It was just that fidelity difference. Pretty amazing. Yeah, you're right. CDs are nowhere near as good. However, it allowed us to carry a lot of different music around, right? All right. Yeah. Oh, my first 2 beater cars had it. Ted Nugent, Aerosmith. Oh, yeah. 8-track, man. I love that. All right. Let me continue on here. Now I'm all over the place. You guys just took me on a rabbit hole. I loved it. That's the beauty of this show, I guess. Trading is hanging out with Vivek Ramaswamy. Vivek is very smart, pro-crypto. Vivek could easily convince Donald to. So here's the thing, and I hate talking politics because I don't want to polarize you guys at all, but Donald Trump, while a lot of people think he's an idiot, there's some brilliance behind it, and the smartness of it would be, let me bring in somebody that the young people really like, right? Pence wasn't likable really for the younger generation, but they're going to look at a guy like Vivek as a VP and go, oh, we like him, he's young, he's very smart, he's blunt, he's brash, you love him, and he's pro-crypto. I'm pretty sure that Vivek is telling Donald Trump, hey, this is going to get a lot of people to follow you if you go pro-cryptocurrency and digital assets. So yeah, I think Trump, honestly, the kind, he will flip-flop his policy with whatever people want to get him in office and vote. So yeah, that will be interesting to see what happens in another few months. I'm excited to see it. I hate it because I'm going to be getting nothing but election calls on my phone, and all the ads on TV just drives me nuts. But just get me that election. Just give me election time. I want to vote and see if things change going forward. So, I heard that Vivek's companies. I heard that Vivek's companies were losing money. Well, then he's perfect partner for Donald Trump. Oh, anyway. Sorry, I couldn't resist. Let's see. So, that was all brought about by a question of Coinbase tied up in correlation with Bitcoin, and what do I think the halving will do for Coinbase? I think it'll be good for them, and I think at some point you're going to get a pretty nice buying opportunity. That said, if you look what's going on here, keep an eye on how much Coinbase moved, right? This, I think, had a lot to do with the spot ETF approval, but Coinbase also rallied 166% in a month and a half. I mean, it's due for a pullback. Now, if you are on the Jeff Manson train, or even myself, I am a fan of Fibonacci, you go here and pull up your retracements, and maybe that will give you some insight as to where we're coming back to. We've come to almost exactly a 61.8% retracement there. There you go. Looks good. I'll just tell you this, though. I'm not going to do anything in Coinbase until after their earnings. I want to just let them clear out. Hopefully, they have a huge down day going in. If the premium is astronomically high, I'll let you know, and I might just take a shot at it. RFK is absolutely pro-crypto. Yep. Jimmy, he is absolutely pro-crypto. He's definitely a fan of Bitcoin. I can't remember exactly what he was talking about. I think he was talking about, doing away with the Fed and establishing Bitcoin. And I was like, oh, whoa, you're not going to get a lot of votes with that, right? You're not going to get votes that way, because what will happen if your campaign platform is to abolish the Fed, which I kind of think we should. I really think we should. If that's your platform, then what you're going to get is every financial institution in the United States is going to be against you, and they will campaign against you and push other candidates against you. Remember, if you abolish the Fed, you're taking away this spigot of capital that helps banks stay rich and make money. And if you take that away, banks will struggle. So they don't want that. So there's no way you can come out publicly so overt that you want to abolish the Fed. What you should do is get into office, let nobody know that position, and then try to get rid of the Fed. But I don't think you'll ever succeed in getting elected if you are overtly against, or you want to abolish the Fed, and that's your platform. I think you'll get shut down. Totally, let's get down. Coinbase has crazy high implied volatility. The biggest reason why I look at it, of course it is, right? What's it tied to? The price of cryptocurrency, which is extremely volatile. And we just saw the price of BITO. This thing's way more volatile. So you're going to get a lot of premium on this one. But I'll wait a little bit. I've got no problem if I miss it again. I would like to own some, but if I miss it, I miss it. So what? There's always something else. That is less popular than a flat tax, What you like more, Fibonacci, Jeffs, or RSI, Brandon's? I would say Fibonacci. I like, I can't explain Fibonacci, honestly. Maybe one day I'll do that a little bit more in depth for you guys. But there's something about Fibonacci that is beyond explanation. If you look in art and everything, you see Fibonacci ratios throughout society, throughout life, throughout food, throughout the human body is riddled with the Fibonacci ratios. It's the golden rule. That's why, the Vitruvian Man, where you have, I think it's Da Vinci, where it's like the guy is spread out in like an X, and he's inside a circle, which is inside a square, and all that lines up mathematically. There's something to it. Intelligent design, perhaps. I don't know. But there's something about it you see in nature, and it's patterns in music, it's patterns in arts. Why wouldn't there be some sort of pattern? Somebody says it's the God pattern. Very well could be. But if those patterns exist and you don't look for them, then there's no significance to them. If those patterns exist and you do look for them and you find them and they work, then there's a huge significance to them. Now, I'm not saying that because I have this Fibonacci retracement level drawn here on Coinbase that it's going to stop dead on its tracks right here at that 61.8 retracement. I'm not saying that at all. But if I can line that up with something that I might deem to be a good demand zone, for example, let's say I see a demand zone over here. Now, there isn't one. But what if there was a strong demand zone right around that same price? And it's a Fibonacci level. Now, my confidence level in buying at that point goes up significantly. So I'm a fan of Fibs. I like them both, I'll be honest, NJ. I'm a believer that in your top-down approach, or my top-down approach to the markets is, number one, what is price doing? That's it. What is price doing? That's first and foremost. From there, I'm going to look for supply and demand zones, because that's the only thing that turned it. And I don't know why it turned at those levels, but I want to see if it did, and I'll utilize that going forward. My third level is indicators. Now, I like Bollinger Bands, I like MACD, I like stochastics, I like RSI. I like them all, but they're not the piece that makes the trade for me. So I don't know if I could honestly put RSI as being more relevant than Fibonacci in my hierarchy. I know some of you have maybe a more opinionated view of it. I think they're all just secondary support pieces, because remember, I've already made my decision based off price and then supply and demand. From there, I can add on those decision support tools and make me feel more confident about the trade, but I'll never make the trade because, RSI is oversold and now it's coming back into a buy setup. Not for me. If I found that price is in a demand zone and is oversold and RSI confirms that, now I feel better about that trade. So first level, price. Second level, what is price done at supply and demand zones? And third level, layer on whatever indicator you want. And I like taking the supplies on demand zone on a fib level on a higher time frame. Yes, exactly. I think that's what I just mentioned. Yep, absolutely. Market likes RSI. Cool. Yeah, and I don't think there's anything wrong with any of them. what I always encourage my students in the past to do is just don't rely on them. Don't make them your crutch. One of the nice filters I like to run in TradeStation is they have this thing called Bollinger Percent B, and it shows you how far something is outside a Bollinger Band, either above or below. I love this indicator. I love it because it just alerts me to something that's either so overbought or so oversold. And if I find something like that into a demand zone, well, then I'm going to catch that falling knife, and I want to put some buy orders down there or sell puts at that price level, and hopefully it works out for me because it's way overdone. Earnings on Fortinet. See if I have another big drop. So, you know what? It's funny, John. I was thinking that same thing. You remember last time they did that? If you go here to FTNT, you remember that last time they had this huge gap down, and I sold a bunch of calls. I want to say it was at the $45 mark. I'm sorry, not a bunch of calls. I sold a bunch of puts at the $45 mark, and that was one that expired worthless, but I collected all that premium, and it was very high premium because I sold it that morning when everyone was freaking out on this giant gap down. I mean, Fortinet was down that morning. It was down 22%. So obviously everyone's just dying to buy puts on that thing. Hey, buy them from me. I sold the puts, and what would have been better, holding the puts or holding the shares or selling those puts? Well, I made a much faster profit than those that are holding, but if you held those shares, they're up $22 a share from those lows, you probably would have made more than I did, but I made it much faster and a little bit easier. Last 2 times, oh yeah, you're right, man. The time before that on earnings, holy cow, 20%. Hey, if we get a 20, so we had a 20 to 22%. Let's just say we get that same 20% drawdown on Fortinet. That would bring me down to roughly. Oh, I'd love it if we got down right into here, right into this origin, this last big move that started on December 6th. Sign me up. Yeah, let me put that line right there. Come on. I would love to see that. That'd be about 21% decline. And there, Tuesday? Yeah, so Fortinet's going to be Tuesday after market, which means Wednesday morning might be some great opportunities based off of how they make or miss. All right, let's see. There we go. Cool. Supplies on demand zone followed by trend line breaks. Yep. Yeah. Trend is your, you always hear me say it. The trend is your friend to the bend at the end. I love it. I mean, it's such a simple thing. So, all right, let me go into. We shall see, John. You know what I'm going to be looking at. If I get a 20% gap down on Fortinet, I'll be selling puts probably right at that $51 level, maybe $52 level. Fine with me. Fine with me long term. Okay, time. I gotta go. So many things going on this week. I'm not going to do a show on Wednesday, just so you guys know. Just set that up ahead of time. I am going to be recording in studio all day on Wednesday, so we're going to have no show on Wednesday. I'll be in Brandon's neighborhood waiting to hit button. All right, let me see here. For your earnings calendar, let's go into this week. You do have quite a few companies reporting this week, but not a lot of giant ones. I think there's some decent names. Economic calendar also is a little bit weak this week. You had today ISM services number, which was better than expected, but let's go to Tuesday's session. You also have coming up here in just a little bit, Australia coming out with a rate announcement, just so you know. 4.35 is what they're expecting, and if you notice on this Australian dollar chart, it's been pretty volatile lately. I mean, you've been on pretty much a free fall. Now, I don't think it's going to get down to this little area of demand I have at 0.636, but, stranger things can happen. Right now, the expectation is they're going to keep things right where it's at and not do anything with their rates, but that's coming up here at 7:30 p.m., and right now, oh, my clock is all messed up. It says it's 9:57 a.m. It's not 9:57 a.m. All right, and tomorrow, Tuesday the 6th, you can see some red stuff here, but that's Canada and New Zealand, not the most influential unless you're trading the Canadian dollar or the New Zealand dollar. For U.S. markets, you have TIPP economic optimism numbers, and that's it for manana for the U.S. market, so nothing that exciting. Let me go to your Forex, or to your earnings calendar. There were a couple smaller names today. I think the bigger stuff happens next week. You had Caterpillar and McDonald's today, and Vertex Pharmaceuticals, all of which beat. Next, for mañana, there you go. Ford, BP, Gilead Pharmaceuticals. You have Snapchat, Amgen, Eli Lilly. So you got some nice pharmaceutical companies in there. And there's Fortinet down near the bottom. Right now, Fortinet expecting 43 cents per share. I will be watching that one. That'll be the most important. Oh, you headed out to Fort Lauderdale, huh? What type of recording, TraderMerlin? Can you share anything? They're just self-paced financial education videos for a different company. It won't be anything you guys get to see, unfortunately. But now that I have this set up, I may actually I may start doing more pre-recorded videos. It's interesting because the way I have this set up here, I've got a triple monitor set up and mission control in front of me, and then different monitors for different things. I could actually plug in that camera, which is a better camera than the one I'm using, and I could be like, okay, guys, let me go and do a weatherman type thing, and I could stand up in front of it. But I don't know, maybe I'll play with that at some point down the road. Yeah, Palantir, they reported earnings today. They were on the list here. Let me just show you. There is, let's go to PPPP. Well, no, I could have sworn that they were there. There it is. So that's Palantir Technologies. Now, this is a fun one. So their earnings expectation was they were going to make 8 cents, right? Okay, 8 cents, no big deal. And it came out at 8 cents. Everything was fine. The analysts read them right. But then you look at what happened to their share price. Oops. Oh, there we go. PLTR. Doesn't look like much, but right now it's up 17% in the after-hours session. So it's right up here where this line is, right there. All right, you're coming right into overhead supply. A little bit higher up on tomorrow's open. That might be a great shorting opportunity. It's got to get to about $20 to make me happy. But yeah, again, I mentioned building an AI portfolio the other day with you guys, and I think there's a lot of different companies to look at, Palantir being one of those. Maybe I should be building an AI portfolio, but I think there's going to be a little bit of a correction first before we have the big, what do you call it? Consolidation within the industry, meaning that there's some players doing multiple things, and maybe they'll start to get bought up or assimilated in other companies, like you saw with ChatGPT, Microsoft, etc. Yep, trading at 1961. Pretty good. All right, so that is your earnings calendar for tomorrow, your economic calendar I got out of the way. I've got no guests on this program, so I will not have any guests this week. There was a question back here. Let me scroll back. I didn't want to... he was very early on. He's probably gone already. So my apologies to the gentleman who... Jags. He said, Dave Ramsey said, if the Fed would have left the rates the way they were, the inflation would have came down on its own anyway. He said, makes no sense the way the Feds are handling it. Well, let me add to that, Jags. He's right. He's absolutely right. But what's not correct is how long it would have taken for inflation to come down. So if the Fed hadn't aggressively started raising rates like this, we would probably still have 8-9% inflation, because it would have gone higher than that and slowly come down. The market will have a way of correcting itself. And this is the argument for abolishing the Fed, right? You have the Federal Reserve, which is manipulating things and steering markets, steering policy the way they want. If you take out that stimulus or this manipulator of the markets will come back down to a normal level. Now, is the historical norm, if we take away the Fed or any monetary influence on the economy, is 2% the normal inflation rate? Well, that's what they've tried to keep it at, right? That's what they've manhandled the markets to be. But maybe what would happen there is the market itself would price in a different level of long-term inflation. Maybe that's 4% or 6%. We won't know unless we have a free economy. We do not have a free economy. We're told we do, but we don't have a free economy. Our economy is kept within guardrails by the powers that be. So I think Dave Ramsey's right. Over time, it would have come back down and established a normal rate, but it would have taken probably a couple of years to have that happen, maybe longer, a few years, for it to happen naturally. So the Fed is like, will you get over your cold without taking anything? Yes, you'll get over your cold without taking anything. However, if you take, your NyQuil and your Zicam and all these zinc and whatever, herbs and stuff you can get, you'll probably shorten the length of that cold. And I think that's the argument for the Fed, is they're the pain medication that brought inflation down quickly. Could they have left it alone? Yeah, absolutely. And part of me wants to see what would happen. I'd like to see what happened if we abolish the Fed and let the markets do what it did on its own. It'd be a very different world. Tell NVIDIA about a correction. You want to buy some? Did it reach another all-time high today? Oh my goodness, another all-time high today. NVIDIA is just absolutely insane. It's just absolutely insane. Well, it's funny. Big Eb's no longer going to be watching the show because he's on a yacht. He's going to be sailing around the world on his yacht because his NVIDIA holdings. Well, you look at my question about Walmart split. Yeah. So great question, Mike. Let me look at that one. And if you look at their news, right? So you got. I didn't see the date on it. Let me see what the date on it is. So let's go Walmart stock split. And 2 days ago, okay, so it's a 3-for-1. Oh, it's on their website, 3-for-1. And then we'll go and find out exactly when that's going to happen because I don't know the date. We'll block that from happening. When will it split? 3-to-1. Shares a record of close of February 22nd. So if we go out here to February 22nd, and we'll go to Walmart, WMT. Oh, I guess I just had the wrong symbol. It's sitting right there in front of me. So you got that. I'll put a vertical line on here for you guys just so you can see the Walmart split date. There's the 22nd is a Friday. So what happens is on Monday, it will open up having split. Now, the question that was sent in, no problem, Jax. The question that was sent in was, knowing that there's a stock split for Walmart, would it be good to buy some? Again, I'm not a financial advisor, but here's what happens historically when someone announces a split. Now, this was announced 6 days ago. So let's go back to let me go to the chart. 1, 2, 3, 4, 5, 6. It was announced 6 days ago. My guess is they probably determined that before then. So since the announcement of the split, at least according to Walmart's website, share price is already up 2.5%. It was up more than that, but I don't know when the official date where they made that announcement. Let me see. Yeah, they haven't said on there. Typically what happens is people have that same belief that, if I have one share of Microsoft today, I'm going to have 3 of them on Monday. So you get a lot of people jump on it to buy it. So what usually happens is you get a big surge up in price in the stock before the split. Then as soon as it happens, then it falls apart. So based off of that, knowing that you've got another 2 weeks. I'm just going to map it out this way. You've got 13 days left before that split. So it would be my opinion that over the next 13 days, the price of Walmart is going to go higher. Just simply because, A, it's Walmart, and I love Walmart, but B, there's going to be those people looking to buy it. Now, I don't like to play that per se. I'm not really I don't know. Even though it happens more often than it doesn't, I don't know why. I wish I should just follow that strategy. And if someone says they're splitting and it's a big company, buy it. The more significant play for me would be once it reaches that split date. And my guess is, based off this chart, you probably see it break some highs and it'll probably look something like this. Right? You'll probably see it, 170 or something like that by the time we get there. I'd be looking at shorting it. Because what happens is all these people now have 3 times the shares they had before. You walked in, you bought 100 shares, now you have 300. You'll sell 200 of them. Right? Because you think it was free money. It's not. It's the same value to you because what you have is if you had a $90, it was $90 when it split and you had 100 shares. Now you have 300 shares at $30 a share. That's just simple math. It's the same value, but it's the psychology of having more of the shares itself, and that will cause a sell-off. So my guess is we'll see a rally up until that split date, which is the 26th on that Monday. Watch that week from Monday on. The whole week of Monday, the 26th week, is probably going to be down for Walmart. Be my guess, out the gates. There you go. So there you go, Mike. Hope that helped. How can it move at 2% when you're printing money at 2,000%? I don't know. I don't know, Daryl. It's a mystery what goes on behind the Fed. I think the Fed is actually a machine to make the rich richer. I really personally do believe that it's designed to do that. Anyway, let me wrap up. I'm done. I already did economic calendar. I did the earnings calendar. If there's something you want me to cover on tomorrow's show, email me at TraderMerlin@gmail.com. If you are new, hit that subscribe button and tell your friends about it so I get my viewership. I need to get over. I think I've been struggling with I think I'm at 5,800 followers on YouTube. Need to get that to 6. I should have gotten to 6,000 by the end of last year. I got to do a better job of getting more viewers on it. But share it and subscribe, and I will hopefully see you guys on tomorrow's show with more fun topics. Just let me know what it is you want to cover. TraderMerlin@gmail.com, or put it down below any of our YouTube videos, and I will talk to you then. Later, everybody.